Hello everyone. Welcome to MiloX News. I'm Marcus. Today, we're diving deep into Tesla's performance. And by the end of this analysis, we'll have a clearer picture of where it's heading. Will it reach its all-time high of 414 in the next year? Have you ever wondered how Tesla's stock performance can be predicted through weekly charts? Did you know that Tesla managed to close above the descending top of the 18-month channel about 7 weeks ago? This significant move has implications for its future performance, which we'll be discussing in detail. In this video, you'll gain insights into Tesla's stock performance based on detailed analysis of its weekly charts. Whether you're a day trader, a swing trader, or someone interested in Tesla's market movements, this video will equip you with valuable insights to inform your decisions. If you want to stay updated with more videos like this, don't forget to subscribe to MiloX News. Let's get started. First of all, I want to remind you that this analysis is based on Tesla's weekly and daily charts. We have been observing a green line that represents a 1% growth threshold. This line goes back at least 6 months, to the low of January. Currently, the resistance is at 287. About 7 weeks ago, Tesla managed to close above the descending top of the 18-month channel, which is now at 188. The initial 2 to 3 month target, which was achieved in about 3 to 5 weeks, was the top of the ascending channel of 287. We have been testing and pushing this level for the past 3 weeks. The overall target is 414, the all-time high of November 2021. The timing of this is almost impossible to predict, but I believe that having closed above the top of the descending channel, we can anticipate a reevaluation of the all-time high of 414 in the next year or less. If we manage to close at 290 or more at the end of this week, I would say that in the next 3 to 5 months, this vertical movement will continue to 414. Until then, we can experience a drop from 287. The bottom of the channel to the top of the channel of 287 is our long-term support zone. Could we fall back into that zone in the coming months? Today, the answer to that is clearer. Yes, if we settle this week, for example, below 251, this intermediate channel structure that is also rising at a similar pace. If we fall back to the low to 50s, it's a great opportunity if you're more of a 2 to 3 week swing trader. If you're short in the mid to high to 80s from last week, the last couple of weeks, you're taking profits in the low to 50s. You can also go long in the low to 50s in anticipation of the possibility of bullish rotation in the following weeks back to the top of the channel of 287. The downside tipping point is 258, but we are testing significant resistance. And more aggressive traders who can trade on both sides of the market play the short side of 287. If we violate 278, I don't then expect 266 within the day. That may well happen, but all the minor points on the way down have been carefully chosen. It's 266 that is the aggressive buy zone not only for day traders, but perhaps for 3 to 5 day swing traders. We could come off here back to the mid to high to 80s again within 3 to 5 days of testing 266. I will also say with respect to 278, I'm keeping it light. The fact that we keep testing and not closing above this significant resistance zone that I mentioned earlier at 287, I want to keep it pretty light. If we close below 278, I believe that is our signal for 266 within a couple of days. So, 2 to 3 day swing traders, 3 to 5 day swing traders, closing below 278, I believe we should expect 266 within a day or two. And if we close below 266, the previously mentioned formation of 253, which once again on the weekly chart is 251, this area down here to the right becomes a 2 to 3 day target if we close below 266. This low 250 area is the prime area to take profits if you've been short from the mid to high to 80s over the last 2 weeks, and also a good area to go long if you're a 2 to 3 week swing trader. We can turn right back up to the high 280s again within several weeks. Finally, there would be a settlement below 253, and I can't ignore that weekly chart level at 251. The settlement below this area tips the market south for August trade. Now, for the upside, if we happen to push or open today above this level of 287, 295 is within reach. 295 is not shown on this chart, but is nothing more than a 5% upside Fibonacci from the all-time high of 414 of November 2021 against that low of January of this year. This is an area where we can stop for the rest of the day, and once again, if we settle today at 290 or more, That is the beginning of a buy signal. I believe that, and I say the beginning. It doesn't become clear until a Friday settlement of the same, but potentially within the week. If we settle on Monday at or above 290, this region of 314 to 315 is not out of the question. And then, closing the week, as I said earlier, above 287 by the 1% margin of 290 on Friday, the settlement or higher. I believe we are 3 to 5 months away from reaching this all-time high of 414. So if you bought those out of the money puts, if you're long on the out of the money puts of 250 or 245 or the out of the money puts of 190, I know you've been. If you've done that and you're still long, then this has definitely been a test of patience. And if we close at 290 or more, especially at the end of the week, my suggestion is to cover those out of the money puts in reverse and reach for 415 out of the money calls that don't expire for at least 6 months. That's all for today's Tesla report. I hope you enjoyed the video. Don't forget to like the video, subscribe to the channel, and leave your comments. See you next time.